Using the same cartridge. Yeah, we've only got actual cartridge. No, so that's fine. Leave it as it is. I've updated the commentary on the top to reflect the margin for outcome. So, yeah, I'm sorry, I didn't post the chart. No, don't. Yeah, so basically, using the same
Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Well, hello, good morning, everyone. Hopefully you can hear me well enough. I'm in the Melbourne airport today, travelling around. There it is. Got a bit delayed yesterday. Melbourne airport was a little bit all over the place. But anyway, we're here. Good morning to you. Good to see you there. A few of the early birds. Welcome back. Welcome along to a Wealth Coffee Chat. Friedrich, good morning to you. Hello. Facebook user, Julie Fletcher. Good to see you, mate. See you in a few days. Actually, a week or so. Paul, good morning. How are you? Yes, one or two good coffee shops. But didn't get to partake in Melbourne as much as I would have liked, to be honest. Would have loved to get around and see a bit more of the world of good coffee in Melbourne, but it wasn't to be. Kevin, good morning to you, mate. All right, well, good to see the early birds here. As you guys know, most of you do, but Jason Wick's my name. If you don't already know, there you go. Now you do. What do we do here? What's going on this morning? Wealth Coffee Chat. This is where we sort of dive into a bit of fear. Try and get rid of that, fear with some facts. And last night we chatted about things at mentoring, and I thought I might do another little refresher review on that. And if you were there last night, hopefully you enjoyed the show, because there was plenty going on. And for absolute certain, folks, morning Bradley, good to see you, mate. Certain there is money and then the hills when it comes to the future of property investing in Australia, and also the next couple of years. But, the idea for many of us is that there might be some things going on out there in the world of property investing, out there in the world of markets, out there in the world of interest rates. And it might be giving us concern to pause, second guess ourselves, stop, maybe I'll wait, and sometimes that's warranted, folks. Sometimes that's warranted. But most times, for most of us, because we're medium to long-term investors, that's not what you need to do. You need to keep your momentum going. Those who stopped when the first interest rate happened 12 months ago should have kept going, because 12 interest rates rises later, now they can't potentially buy anything. So, that's the process. That's the thing. Let's talk about how the types of deals that we will make this morning or this year, you you need to make sure you understand and get on top of as a property investor. Anyway, there you go. Let's dive into that this morning. What are the 11 ways, 11 strategies, 11 property types, 11 deals that we could do together that will make you instant equity in 2024? That's what we're talking about this morning. All right, good morning, Chris. Morning to you, mate. Fantastic to have you here, buddy, as always. So if you didn't catch it last night, I'm going to do a bit of a refresher from last night's 11 ways of making instant equity coming into this 2024. First one, inherent apartment equity. What did we talk about last night? So this is where the gap between the world of houses, folks. Houses, I'll try and draw a decent house here. A house and the gap between apartments, the pricing, folks, has stretched out. Houses have shot up in value significantly, and apartments have gone up in value a bit slower. What has that done for the market? What has that done for property investors? What has that done for equity arbitrage? I like it, Tim. Indeed. What has that done for the marketplace? Well, it has increased the gap, the value gap between houses and apartments by approximately 40% on average. 40% on average. What has that done? Chuck it in the chat for me. What do you think will happen? What do you think will be happen to the pricing? And it's happening in rents as well, not only values, but it's happening in rents also. Put it in the chat. What do you think, guys? What will happen? What is going to happen when it comes to the value of good quality apartments in the world of property investing? Well, I can tell you what the normal long-term average of this gap Sam was sharing last night. The normal long-term average is about 20% gap. Yep, you are dead right, Tim. And so the values will rise mostly on apartments because it is the most affordable property type right now. The most affordable property type right now. You'll see values rise. So values will rise, and also rents. Rents are rising faster in apartments than they are in houses at the moment. Why? Because the house market and the house rents have shot out ahead, absolutely miles and miles ahead in comparison. And for the average person in certain radius of the city or location or infrastructure, that's unaffordable. Okay, so that's what's going to happen. We as property investors can benefit from that if we get in position and we know, all right, that's going to happen. So inherent equity in apartments, all right, there is easily a 20% compression between the price of a house and the price of an apartment, the right type of apartment, coming our way into the future. The other one last night we shared was the dwelling equity with townhouses. Right now, folks, it is 20% cheaper, 20% cheaper to build a townhouse than it is an apartment. Okay? Go figure. Why is that so? Apartments often are multi-story. Anytime you go above 3 stories, the price of things change, the construction, the associated lifts and all that sort of stuff. Does it mean that apartments are not worth buying? No, absolutely not. The right one is certainly worth investing in, and we know there will be. We'll show you in a minute. There's a bunch of types of apartment properties that are going to be significantly worth investing in. However, right now, townhouses 20% cheaper to deliver, and that's not being paid attention to. So in the marketplace, townhouses are 20% cheaper. Houses are out there. People can't afford them. They're considering an apartment as a cheaper alternative. But some townhouses, especially connected to what Sam calls a third space, green or infrastructure, are absolutely significantly undervalued, folks. Okay, significantly undervalued. And in here we're talking in these opportunities, ladies and gents, we're talking. This is 100K of equity in each of these strategies, right? When it comes to the world of property investing, over a 12 to 24 month period, 24 and 25, it will deliver these sorts of things. Dwellings, townhouses in the right spot. Certainly, townhouses in Brisbane, and townhouses in Melbourne are like this right now, folks, right now. So that's pretty interesting. The double cycle equity character suburbs. What Sam is saying in this one, and he was telling us last night, that some of the suburbs that are the NIMBY suburbs, NIMBY, the gentrification suburbs are getting a double whack, a double growth cycle. Now these ones are the sort of the 1 million plus suburbs, but there is, if you're in that price range, those properties are easily pushing up quite quickly. And again, it's only a small rise. When you saw the market predictions last night from the economists, many of them are in the positive. Only one or two are flat or negative. The market that you might be in are going to be, pushing along. The free riding equity market, folks. If you have not got a piece of this action, you need to get on board. The Olympics. We're now at 2023, folks. Basically 2024. It's only 6 years to 2030. 2030, and the Olympics is 2032, right? This is going to be an absolute no-brainer, right? Billions and billions and billions of dollars, right? Billions of dollars are going to be spent in Brisbane, billions of dollars spent, and then the market is going to be shown. The southeast Queensland market is going to be shown, really, from Gold Coast all the way to Sunny Coast, is going to get this billions of dollars worth of infrastructure value added. It's a once in a lifetime southeast Queensland thing. Once in a lifetime, folks. Are you in place? And if you're not, you should be. And right now, up in Brisbane, the best value up there are the land and build. The land and build. You wouldn't believe it. The land and build, followed very closely by a good townhouse. The apartment market in Brisbane has shot up so far. It's crazy. And the competition with the Brisbane Olympics and the infrastructure for construction is making it quite difficult to deliver multi-story apartments in the right value range en masse, folks. The supply is absolutely stuffed. We've told you this 1,000 times. But listen, you're going to make money if you get on board. This one's a no-brainer, folks. This is like, seriously, you get yourself a $700,000 to $1 million house up in Brisbane. It'll add 300 to 500 grand worth of equity over the next 6 to 8 years. Absolute no-brainer. No-brainer, folks. Get on board. Don't miss that one. All right? Don't miss that one. And right now, 2024, as we go, you need to make sure you have a look at that one. All right? The renewal equity gentrification suburbs, what's happening right now is those suburbs that were, that sort of the 20K suburbs around the cities, they're getting a second shot at it, folks. They're getting a second shot because, the distance, 40, 60K from the city, Sam was talking about last night, there's a renewal in this 5 to 20 kilometre range. It's not $20,000, but 20 kilometres range from the city. Those suburbs, some of those infill, we were talking about last night. We've got some stuff up in Brisbane around that $1 million range. That's that double. There's a double cycle with there's the double cycle playing into this as well. Imagine this. Imagine you've got the double cycle. You've got the Brisbane Olympics. You've got the land supply issue, and you've got the infill. It's an infill. It's an infill suburb as well. It just sounds like too much, doesn't it? Like as I try and explain this stuff to you guys, it's like, oh yeah, that's just a sales pitch. No, It's not. I'm telling you right now, it's insane. I have never seen the value lining up like this in my entire life. I've been doing this for 26 years, folks, and never in my life I've seen so many things. It's like I won't say it's. I've never seen it like this. Never seen the opportunity to be involved in that market with all the positive signs. If you're on the wrong side of the coin, it's negative, right? If you don't own and you've got to rent, well, that's going to be difficult. Anyway, I'll keep moving on. That sub 20 kilometres to the CBD, especially in Brisbane, is just confluence indeed. It's crazy. It is crazy, folks. Mean reversion. Ladies and gents, this one's a pretty easy one to understand. And, Perth right now, Perth is getting some significant 10% capital growth, 15% rent growth. Absolutely cracker, right? Cracker. A little bit more difficult to get the properties in the right spot in Perth, but if you can get one, make sure you get your foot on that one. In Melbourne, we still think Melbourne, unfortunately, because of its political management, the crazy politicians, folks, the mad pollies, it's still so undervalued in a certain way. It is, that's a UV, undervalued. It's crazy, right? So, yeah, Tim, I tell you, I was going to show you guys this. I'll show you something in a second when it comes to the stock. So undervalued one. This one is crazy right now. Sam is talking about properties that were priced and purchased in 2019. So, they were bought. So the land was bought in 2019. The construction cost, the development approval, the DA and the BA was done 2020. The construction pricing construct was locked in in 2020, 2021, right? And they started putting the deal together, right? They locked it in. They've got locked in pricing for this deal. And it's going to flow into, 24 and 25, right? So it's locked in. And, they're selling it for a certain dollar value. New properties being sold right now in the same area are 30% more than the price you can get for the ones that are already locked in and ready to go. All right, this is instant equity on a rocket ship, and Sam was talking about last night. You can get involved, and we call it jumping the hump, right? So the idea that, let's say, the cash rate's up, the cash rate will go down, and you'll be settling in 2025. When the cash rate's down, the rents have gone up, the values have gone up, and your cost goes down. Absolutely perfect, and all you've got to put down is a 10% deposit for the moment. Absolutely brilliant stuff. Yeah, people having breakfast. I think they're listening in. Who knows? Yeah, there you go. Anyway, future suburban equity, the Springfield effect. This is another one. Those suburbs, right? What happens in the world of a brand new suburb right there, Springfield, an old suburb right here, Springfield. You've got $1 million houses here, right? And literally 6 minutes away, these houses are worth $500,000. Why? Why is that so? Why is it that those houses 6 minutes away from Springfield are worth 50% less, or the Springfield houses are worth 50% more? And this happens when Stockland and bigger companies build these communities, right? Because, folks, they invest in the infrastructure, the schools, the hospitals, the jobs, you name it. Again, it's that free riding infrastructure equity. Millions, like basically billions, to be honest, billions of dollars come into that area, and it's brand new. It's wonderful. It's got parks. It's got, bikeways. It's got, schools for the kids. That is where you're going to make money. And right now, in places like Brisbane, this is coming in Sydney, by the way. There'll be a new one like that in Sydney, and a couple of areas in Melbourne. You can get that the Springfield effect, folks, and that's going to make you money. It's going to make you money, and you've got to get on board with that one. This is the old unicorn. Sam put this one together as well. Listen, what are the unicorns? What are the lifestyle things, right? So you go tree, sea. Wasn't there a third? A tree and a sea change. A tree change, a sea change. I don't know. Put it in the chat if you can remember. I thought there was a third one. All right, these lifestyle changes. Well, up in the sunny coast, again, this is kind of like number 7, which is the off the plan equity. The project was put together in early 2019-20, and now it's coming out of the ground. Now the pricing for back then to now, absolutely fantastic, right? So sea change, waterfront. This is, and often there's a combination of these strategies, folks. This one, Sam's talking about, waterfront, sunny coast, lifestyle area, Brisbane Olympics infrastructure spend, you name it. Again, there's a confluence. I like that one before from Friedrich, a confluence, a finding of all of this going at the same time. This one's pretty straightforward. Land gains as land runs out. What just happened in Queensland? The government just said, all right, first home buyers can get free money. First home buyers, $30,000, 30 grand, folks. Plus they get LMI assistance. Plus they can get a 95% loan, right? The first home buyers are out and about, right? All immediately for, and I said this one last night at mentoring as well. As soon as that happened, Sam got phone calls from all of those landowners and developers, and they said, listen, you got a week. We want the land back because we just got inundated with inquiries. Folks. Yeah, 30K uplift. And I talked about this the other day, folks. The average property price in QLD was $650. They said, all right, you can get 30 grand up to $750. What's going to happen immediately? Because it happened in Sydney as well with the stamp duty thing, folks. Right? What's going to happen? 650 to 750. It will go up, right? The extra 30 grand will push the price of all of those properties, the average price from 650 to 750. You're going to get an uplift because of the free money giveaway, folks. You're going to make 100 grand, 100K right now. Bush. That's exactly right, Chris. They go up, boom, to 750. They'll go to 749. Every property will be priced at 749. You watch. I've said this 1,000 times. It's actually not that difficult once you sort of take a breath and just have a little look. And it's the stupidest stuff. Like I'm happy for first home buyers to get on board, but the government, they do some dumb shit. They really do. Right now, and this is a really interesting one. 2023, and let's say they launched a project in, let's say, 2021, right? The developers, let's say they've got, 100 properties to sell, 100 properties, right? They might have sold, 40 here. They might have sold 20 here, and they've got the last 40 to sell, right? And the building's almost complete. And we're seeing right now, or some of these buildings are complete, right? So if you had a look, when they launched their building, the borrowing power has decreased. So they launched it at a certain price. Okay. They launched it at a certain price, and the average person's ability to buy at that price has declined significantly. So a large portion of these properties are going unpurchased, and they're complete. They're brand new. You can get a valuation today. You can get finance locked in, right? And Sam, and tell me what's happening. So if you've got a whole building complete, what's going on for you as the developer, right? The cost of your interest. Think of the cost of 100 units fully complete and you haven't settled them all, folks, what's happening to your costs? Absolutely going through the roof. So, what happens? That's an opportunity for Sam and the team to go in and negotiate. Hey, we'll take that, but we'll do a deal. We had a deal come across our big discounts. Exactly, Brad. We had a deal come across our desk the other day down in Paradise Point in the Gold Coast. The guy was offering 25% discounts because he'd run out of cash. He was like 4 months away from completion of his project. Beautiful project. Crazy good. He just needed to complete the project, and there were 6 or 7 left. And he said, "Right, if you take them all, and we're trying to knock that into shape." So, and this is not. It's not unlike the GFC. It's not widespread. It's project by project. It could be anywhere because it's situational of the developer. Okay, the developer. Adrian, me too. I hope I haven't missed my flight. Anyway, there you go. You're dead right. I better go and check. All right, that's it. I'm done. That's the 11 done. All right, folks. You be good. Brad, Adrian, thanks, mate. I was getting excited. Anyway, folks, I will. I'll leave you there. Whilst coffee chat done and dusted. Good to see you. Join me tomorrow. We'll have another one if you're up for it. Adios, team. See you later.